Hello guys, welcome to this channel. Today's lesson is on order block. Order block is one of the most important institutional reference points whenever you are talking about SMC, whenever you're talking about the smart money concept trading. Yeah, in today's topic, in today's edition, I am trading volatility 25 index. I am on the 1 hour time frame, as you could see, and here is my order blocks. I have a diagram of what the order blocks might look like. Now, some people are asking, what does order block mean? Order block are areas where large volume of orders are being placed. They are usually areas where you have high volume of money residing. They could be a sell order or a buy order. It could be at the top of the chart or at the low. An order block could be in this shape, could be in this shape, could also be in this shape. It doesn't matter. It doesn't matter how it looks. But what you're supposed to take note of is where it's residing. An order block has different ways of shape. It could be in this shape, or this shape as I have described. So let's go ahead and let me show you some examples I have already marked out on my volatility 25 index chart. Yeah, so I'll be showing you a lot of examples of order blocks, lots and lots more order blocks examples. I have marked them out to make my video very easy for me. It doesn't mean that when I see them I don't know them. But I'm going to be showing you how they look and what makes them valid, so that you will take on a practice, back test them more and more. It gives you a clearer picture of an order block in your head. Now whenever a trade is going on, you can easily pinpoint an order block. So over here I will take this out. Now what actually makes this an order block? Now whenever you see a candlestick at the lowest point, this is actually a low and this is a high. This is a low. Now whenever you see a candlestick lying in this manner, lying this way, it is an order block. It is very easy to spot because you have it just at the tip of the chart. You have the chart coming from up to up and came here and ended here. I'll be showing you what you use to know if a valid order block is not just it lying at the tip. So if you have a candlestick lying in this manner, a red candlestick, and the next candle that follows it is a green candle heading upward, just know that this is a bullish order block. It is red in color and it is lying on the tip, and it is followed by a green candle telling us that this market is an uptrend. It has just gotten to its last point. It has gotten to the point where there is a large volume of trade, where we have our big players putting their stop loss over at this area, and now they are hoping the market continues on an uptrend. And whenever you want to mark it out, you mark it out this way. And now, what is the big idea over marking out your order blocks? Now, I would love to tell you how to identify a valid order block. A valid order block. And there are three things that makes an order block valid. One is order block that has a FVG. 2 is order block that is unmitigated. And 3, order block that leads to BOS, is a short form of break of structure. For the FVG, it is a short form of fair value gap. If you're not familiar with this, you can drop a comment on this comment section telling me to explain what an FVG or a BOS is. They are very simple things. But in this video, I'll be giving you a light description of what FVGs are and what unmitigated order block will look like, and what an order block that leads to a BOS will look like. Now, going back to our previous example, if you look over here, you can see a fair value gap. You can see a fair value gap. If I should expand it so that you can see that very well, expand it. Now, can you see the fair value gap? Does this order block has a fair value gap? Yes, it has a fair value gap over here. You can see that from this point to this point, there is a gap line between this point and the third candlestick. So that makes this fair value gap a valid order block. That makes this order block valid. Now, on our table, we have the second criteria to be an order block that is unmitigated. Pay attention to this. Pay very close attention to this. I want to say now. Now, what does it mean to say an order block is unmitigated? This area you marked out, this area where you marked out, ensure that price has not stepped into this area. If price has stepped into this area before its uptrend, or before an inducement, or during an inducement, price stepped into the area of the order block, that order block has been mitigated. It is no longer a valid order block. It might go your direction, but it is a 50-50 at this point for this period. So ensure to take a trade with an order block that is unmitigated. Price has not entered into the order block to trade in there, to walk in there before it moves out. And lastly, an order block that leads to a break of structure. An order block that leads to a break of structure. Now, as we can see, a break of structure, this order block actually led to a break of structure. This was our last lower low over here. If I should shrink it to make it very, very easy, I will explain every bit of it for you. And whatever you don't understand, you can contact me on the comment section to give you more explanation. Over here we have our higher high, we have our lower low, we have our lower high, we have our lower low, we have our lower high, and we have a lower low. At this point, there was a break of structure at this point. If I should mark it out for you, and you see that after this trade went down, created a lower low, it went up, created a lower high, and the trade didn't just stop here. If it had stopped here and gone its way up, we would have known that there was no break in structure. But it came and broke this structure, continued downwards until it got here and formed this order block. So that tells us that this is a valid order block. Take note of these three things. If you really want your trade to go as planned, to go as predicted, to have 100% assurance, you must take note of these three things I listed here. Order block that has a FVG, order block that is unmitigated, and an order block that leads to a break of structure. Take note of these three things. So now from here we move on to look out for another example. First of all, it must be unmitigated, must have an FVG, and must have a break, must be another block that leads to a break of structure. Now on that point, I will go furthermore trying to tell you how to enter your trade, but that should be this for now. But from your psychology, you can see that at the rebounds into this order block, the trade went up. It went up, and it never came down. Even when it had a retest into the order block, it never went past this other block. It never went past this point. You can see that. So it keeps going your way. But once you have up to 10 candlesticks in another block, you are okay. 10 candlesticks, you can have a 1:2 ratio. You can risk a $50 and come out with $100, depending on your risks. So I'll be moving on to another example I created over here, and you can look at it very well. You can see that over here I spotted another order block beside in here, and this order block leads to a break, a structure. It is unmitigated. You can look during the point of the order block, there was no price action into the order block. And then you can also see that order block has an FVG. Now in this case, whenever you see price reacting at the FVG of an order block, it is a very strong institutional reference point for you to get into trade. A very strong institutional reference point. I intentionally added this. I intentionally marked this to explain to you guys. It is either price is going into the order block or it is going into the FVG, and it is going as expected. It is going as expected. Don't worry, furthermore, I will be giving you more details about an order block. So let's go on. I made more examples. Over here we have another order block lying just right here. We have another order block lying just right here, and this order block is having FVG. As you can see, I've rightly marked it here already. The order block is unmitigated. As you can see it is unmitigated. Price didn't come into it to hamper with its block, but price came to the FVG just as I pointed at the last one. Then price went our way. So you can see that order blocks and FVG works handy to ensure your trade goes appropriately very well for you. We'll go on to look on for more examples. As you can see here, this is another order block that has an FVG. You can see there is a fair value gap following the order block, and the order block is unmitigated. And thirdly, the order block leads to a break of structure. It leads to a break of structure. It's coming from where it broke a structure down. So you can see that when price reacted under FVG, price kept going up. You can also see another example here. We have order block over here. The order block has an FVG that is very small. It doesn't matter how small the FVG looks. I need to expand it so that you can see it very, very well. Can you see how the FVG looks very small? But a problem I have with this order block that it was already mitigated at this point. You can see price busted into the order block a little, and if you ask me, I think that was why we didn't have a very long down trade as we expected. We had price going the opposite direction after going down a little. You can see after price mitigated it a little, it still came and tested the order block, then went down to a certain level. If it wasn't mitigated, I think this price would have gone down so much a little. But because of this mitigation over here, that was why price go down. But yet it was still valid because it has an FVG and leads to a break of structure. So we'll keep on showing you more examples, and you can see the example over here. You can see this other block over here. See its fair value gap. You can see it leads to a break of structure, and it is unmitigated. As soon as price got into this other block halfway, price went down our way. I'll keep showing you there are lots of other blocks, and other blocks are a perfect institutional reference point for us all to trade on. You are a very strong institutional reference. If you know what you are doing, you will be able to trade other blocks continually as a trader and be profitable. You can keep looking. Even aside from the ones I marked, I can still point out other blocks. You could keep looking. Once you see another block, it's very clear. So thank you very much for watching this video. Okay, you just have to watch this video over and over again. If you don't understand, ask me questions on the comments. I will make videos on your questions.